Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
What's going on, guys? It's Brinks Trades coming to you live with another week of breakdowns. Hopefully everybody is doing good today. Taking a sip of tea. Hope everybody had a great trading week last week. I had a pretty good documented week as documented in the chat. I think it's like up 7K in the last week. So that's really good. So hopefully everybody's having a good week, a good weekend. What I want to do is go ahead and, I know I'm a little bit early, but I'm kind of running. I got a lot of things I want to take care of, but I want to make sure that I come on here and give you guys the breakdown. So again, if you don't know me by now, I'm Brinks Trades. I am the resident indices futures analyst for the Trading Nut podcast. So I cover anything that is really futures, indices related. So when we talk about NAS100 or the NQ, the ES, the YM, that is what I look at in addition to some of the currency futures. So these will be very similar to the charts that you guys look at when it comes to Euro USD and the traditional majors and Forex. So again, I've been trading for about 10 years. You guys know my story by now. If this is your first time here, cool. If not, then the story. But I've been trading for almost a decade. I've been seeing a lot of ups and downs, and every day I'm really just trying to make myself a better trader than I was the day before, right? And so, still prone to these, still prone to moments where I do, dumb things, obviously, like everybody. But every day, every year, I've been getting better as a trader, and just really here to document my expertise and help everybody get a little bit better. If you guys are following me on social media, you can follow me at Brinks Trades. Let me see. Yep. At Brinks Trades on YouTube. I'm currently doing a mentorship right now. That's kind of like a basically free mentorship for people who are doing Forex. But then also I have my private mentorship group that I work with. If anybody's interested in joining that, please let me know as well. But this is the one I'm doing for YouTube. It's kind of like a very rough way of looking at the market for just people that, see this, and, it's kind of my way of giving back. I don't know how long I'll be doing like a quote unquote free mentorship, but again, this is really my way of saying I'm trying to get back. So let's go ahead and look at the charts. See who's in the charts in the crowd. Tony, appreciate you, man. Grand Rising, Chris Brinks and Trading Nut. Thanks, appreciate it. So let's go ahead and look at some of the charts for today. So if you guys know, obviously dollar is king, so we start with dollar index. So let's go ahead and go look at last week. When we look at all of of what we wanted to see last week. So there was a couple things. If we kind of zoom in on this price action right here. So last week, our long-term target was really this old relative equal highs right here, right? So just a lot of liquidity built up over these levels right here. So we just kind of assumed that the market would probably come back to these areas at some point in time. So that's awesome. The level that we wanted to see the market run to, again, actually kind of tap this high. Again, was trading back above these highs, and that was our target. So basically, we had a huge bullish week. I mean, pretty much from the jump, this market was bullish. We ran up above this old high here. Really, coming into the week, my first real target was going to be the old high of last week, and that was pretty much shot through, I think, like on Monday, and really en route to this higher time target here. So ideally, what I want to see happen next over the next couple weeks here is the market, continue to really make higher highs. I mean, we really don't have a target. Well, I'll take that back. We don't really have a new target we want to see the market run to, but ideally, we want to see the market really kind of do something like this, trade lower. Right? We can't really bet against this trend. Right now, there's a lot of factors as to why dollar is really strong. And I'm going to go ahead and get rid of some of these before I really get down into some more analysis. Actually, I'm going to clear this out so we can kind of start all over again. So again, last week's target was this high right here. Which we took out. So I'm going to leave that up for now. So ideally, what we got to see now is if the market is going to continue to run up, obviously, and could take out higher highs. And if we're looking at the weekly time frame, we can start to see some levels like these old highs here, right? And see if we're going to eventually run for these. My guess is that we are probably going to continue to go higher. But I'm looking at some of these old highs right here. We know over old highs sit liquidity, right? So the market's going to really want to run for these. There is another thing here too that I'm looking at too. So all this action is happening inside of a fair value gap, a CIBI, right? So a couple things to note here. These relative equal highs were formed right around the consequent encroachment level, which is the middle of this gap at 105.765. So ideally, what we want to see here, I will feel a lot more comfortable taking long positions or looking for long opportunities on dollar if once the market breaks above these old highs. But as of right now, we don't really have, I mean, this has been a lot of consolidation. So we just, as we kind of hit an old target, this is why I say we, in theory, need to kind of take a step back and say that and see that. Hold on, give me 1 second, guys. Sorry about that. So what we need to do when we kind of look at dollars, we need to be able to take a step back and say, okay, cool. Is this the ultimate target that we're going to hit, these relative equal highs, or are we going to keep going higher, right? And that's kind of like the one thing that when it comes to traders, we have a hard time doing is, just kind of being able to kind of make a final determination as to whether this is a reversal area where the market was going to get in terms of just continuing to go down, or is the market continuing to go up based on this area? And so ideally, since there's not really any signs of bearishness here, I want to see the market continue to go higher, right? I want to see the market really continue to reach for higher levels of liquidity. If we jump up to the monthly time frame, again, all of this price action is happening basically in a monthly CIBI, which we are on the verge of inverting. So the thing here is, I'm looking to see how we react with this level. So Ideally, I'm still bullish. I guess it's a long way of me saying I'm still bullish on dollar, but this is obviously going to be pending stuff over the next few weeks. If we jump down to the daily time frame again, we start to see some potential levels that we could see the market run to. So again, this is that old buy side liquidity level, that old high. And the next level that I'm really going to be looking for and at is, let me get rid of this so you guys can see, this is a target. Why this level here? Because an old high, right? And since this is a wick, if you zoom in right here, since this is a wick, I will be looking to see if consequent encroachment of this wick applies. So again, consequent encroachment is just the 50% level of any liquidity marker. That could be a wick, that could be a order block, it could be a fair value gap, right? But the market will use these levels kind of like determining factors to see if the market wants to get to that high. And so basically how I use these levels is if price has a hard time breaking through that 50% level of an old wick, then it could signal like a reversal, right? And then the market's not going to go as high as we think it's going to go. So ideally, I'm bullish on this. So I guess this is a very long way of me saying that I'm bullish on dollar. And just again, geopolitically, everything going on, there's really not a reason to doubt and go against that. So I'm really excited to kind of look at some of the other currencies and indices this week to see what we could potentially be getting. So again, bullish on dollar. Ideally, there's two levels that I think the market could run back to. It is this first level here at 106.18, right? This old fair value gap, which we already traded into previously. And then this old volume imbalance right there. I think if we go any lower than that, I mean, I would want us to stay above this high, right? So like I like the fact that we didn't just trade above this high like this and then dive right back under this old high with the buy side, which is a good sign. It's usually a good sign that the market's going to continue to rise up higher. And so not only is it giving us new fair value gaps and new volume imbalances, right, that to the upside, which is kind of signaling that the market wants to keep running higher, but it's staying above again that old level here. So ideally, I want to see the market really dive into this level or this level at the lowest, right, depending on what we have to continue to run higher. So that's my dollar analysis. I want to see again more bullish prices, but I am wary of everything that's going on and where we're currently sitting in this bigger time space. So ideally, if we're looking at that level, that 106.32 level down to that 105.97 level is ideally the areas that I want to see price potentially pull back into to continue to go higher. Again, first target will always be the old week's high in an uptrend. So that'll be like the first primary target. But really, with the strength that we've been seeing from dollar this week, I really want to see the market continue to go higher, right? And that inevitably means that strong dollar means a weak euro, a weak pound. So let's go ahead and jump there. Let me hop to the comment section really quickly, see if there's any comments. Not there's anything going on. So let's go ahead and look at euro. So basically last week coming into euro, there's a couple of things we wanted to see play out here. So we look at the weekly time frame. This was, this was a really great week. I had the opportunity to pretty much make about, I want to say about just shy of 7,000 in like a week. So really a really good week playing out. So we look at the weekly time frame again, right? There's a couple levels that we wanted to see hit. We pretty much hit everything this week. We took out this old level here, and I'm going to clear these charts off just completely so we can kind of draw this again. I tell everybody that I really trade, so my charts look dirty at the end of the week. But ideally, so coming into this week, there was a couple levels that we wanted to see hit. We wanted to see the market really run back below and really take out this level of sell side. On the weekly time frame, we're basically sitting and looking at this whole this BISI here, which was kind of like our long-term target. right? And we traded below this. We really hit consequent encroachment this week, or this gap right here. And you can see we pretty much ended on that. So really the question here now is, are we bullish? Once we hit this gap, is the market going to do something like this where we consolidate, manipulate, and distribute, right? Or are we going to keep going down, right? So are we going to keep breaking this and taking out old lows? And my bet is that we continue to run lower, but because I don't really have anything to go against this as of yet, right? And so I think sometimes we, as a traders, what we try to do is anticipate the run before it ends. And we say like, oh, it's been going down forever, so it should reverse now. There's no really reason for that. It could be running to a higher time frame objective, right? So when we look back at the last few weeks, if we go back to this, we pretty much were bearish right out the gate. We came in Friday, gave us these relative equal lows, right? Friday gave us these relative equal lows, which we came and violated. And my target for the week was really this low right here, right? And so I wanted to see the market really come down here, but I thought we could make it, if we got an extended run, we could take out consequent encroachment. So that was kind of my target for the week. We kept running lower though. If we kind of fast forward this and kind of see how this market played out. Obviously, and we traded back into, we ended the week really interesting. So we traded back up into this old fair value gap here. And I'll kind of make this red. Traded back into it, and we just got a very, very strong rejection. I actually was able to catch that yesterday for, I think, a few thousand as well. So a lot of the trades that I've been taking recently have just really been on the pound futures. The pound in the euro futures. I told you guys coming into this week, that was the one that I felt the strongest about. Nasdaq has been really choppy, so I've really been focusing a lot here. And so again, if we draw out, right there. If we draw out, again, what we want to see potentially happen, there's no, I can't even call bearish a bullishness in this at all. We could see a counter trend week for sure, right? We've had like 3 straight weeks of bearish action, but there's nothing here that lends me to the idea that we could potentially go up, other than the fact that we traded in respect to consequent encroachment of this gap. But the longer time frame still says bearish, so we have to really vibe with that idea until we get something that kind of lets us know otherwise. So again, I have to kind of run with the idea of bearishness. And so again, if we're looking at levels that we think the market could potentially run to coming out next week, we have consequent encroachment here. I'd like to see something like that happen. We could even go back as high as this gap again, right? So I'm gonna make a note here. And basically right now, these are all the levels that I think the market could trade back to kind of give us the high of the week. So ideally, I want to see the market really run back for these highs. I also want to see the market potentially could run back into this gap and retest it again, right? We could have a reaction off of this consequent encroachment. So either somewhere here or here, I'm going to, I'm just gonna make a note. Let's just say like high of week potentially. And just say CE of Friday, right? And just draw this out in time, as well as the old high here, right? We could see something like where the market could come up and sweep the high of Friday and then go right back down. Or it could just come back and retest this gap too, right? So it could be any one of these levels, but there's nothing that lets me know that we're not going to continue to be bearish. If you think about this run that we've been on, this is really the first order block. This yellow candle, or this white candle is really the first order block that we've formed on the way down, right? And so there's not really a reason for us not to consider bullishness, other than the fact that we traded back into this old SIBI, right? So until the market really gives us signs that it wants to continue to go higher, then we have to kind of play that. And it is chopped a little bit, right? This has been a lot of chop back and forth. And usually after an extended run like this, you'll see some form of chop before the next move happens, whether that's a reversal or going down. We did kind of form a higher high and form to break below this low. So we could see the market really trade up higher over the next few weeks. So I'll be kind of sitting back on Monday, I believe, unless there's, a crazy news event. But I'll be kind of sitting back over the next week or so to kind of see what happens, or next couple of days into the week, just to see, what the market's looking like and how it respects certain levels coming into the week. So ideally, again, I want to see the market do something like that, get back liquidity, and then continue to go down. So I'll be looking target wise at the low of last week, especially if we have a really high run, because I just want to get something that gives me a really good risk to reward ratio from our initial weekly high to the low. So I'll mark this as our target for the next week. But again, knowing, just knowing where we're at, I kind of want to see the market just play out a little bit before, before running lower. So let me hop into the comment section and see if there's anybody on here. If you guys have questions at all, feel free to throw them in. If you want more general information about trading, I'll stay on after the call just to kind of talk about a couple of things. But ideally, this is just analysis for next week. Take advantage, because I'm going to be honest with you, there's nobody on YouTube that breaks down stuff like me. So let's see. Going to pound futures. So we smashed that target as well. I do think going into next week, I do really like pound futures a lot, because I think we're eventually going to come down here. I think this is going to be like the final target. And I told you guys, there's a couple things that I told you guys that I wanted to see happen, right? And the first thing was, I put it right here. I want to see this inverted, right? So I want to see this this market really or this fair value gap, which on the weekly time frame pretty much get taken out. And so when it comes to trading, obviously you teach like a lot of these technical stuff, like what a fair value gap is, what a high, what a low, what's liquidity, right? But everything is situational, right? And so there's going to be times where you want to see these gaps. Yeah, this is a BISI, right? In theory, in a normal situation, this is going to be green, right? That's at least how I note it. And it's going to note that we want to see bullish activity when it trades back into it. There's an order block there, all that stuff, right? So there's going to be times, though, where you want to see these things inverted and you want to see these things line up with a higher idea of where you think the market's going to go. And so when that happens, I said coming into this week, I'm really excited about taking pound, but I don't want to take any trades on pound until this gets inverted. And that's exactly what happened right here. So Tuesday. And so when this gap was pretty much broken through and closed below, which it fully inverted at the end of the week, but when it broke through this, I was like, okay, cool. This is go time on a sell. And so I think I waited for something to give me, I think it was this right here. When we broke structure here on the smaller time frames, I was looking for opportunities on the 5 and 3 minute time frames to really hop into trades. So there's going to be times where you want to see these things really knocked out. But I think pound has a lot more room to run. And so ideally what I want to see happen here is, now that we've taken this out, I want to see this close keep going down. It's a great sign that it wicked below this low and closed below it. But I also want to think about this from a weekly perspective. So just going back up one time frame. If we're going to be bearish, there's a couple levels that I want to see respected. I want to see consequent encroachment. It works on both sides, right? So Again, the market will look at these wicks, these long wicks, sometimes as a gap, right? And so the idea here is that just like the gap is divided into three ranges, the consequent encroachment of these wicks are divided into three ranges as well: the high, middle, the upper, middle, and lower, right? And so this is real technical stuff, and it's real like algorithmic based trading stuff. But essentially, all these markets are controlled. That's all I'm gonna say for now. But if you are in the class, you guys know. So this is CE of this wick. If I'm going to be bearish this week, I want this market to stay below this wick. I want this market to, it can wick above it, like it can do something like this. But I want this market to close bearish. I'm sorry. I want this market to close below this consequent encroachment. There's also some other liquidity here too that I think is going to be another reason why the market is going to continue to run lower. Drawing this out here. This old Bissy here, right? And this is basically, if you guys are in the class, this is what I was talking about on, like last Sunday, that whenever you are in a downtrend, you want to see old liquidity markers that represent bullishness to break or to fail, right? So there's a couple levels that I think we could potentially run back to next week. If we get a nice pullback, and the most ideal pullback on a weekly time frame is going to be this old level. So I want to see the market really run for something like this old wick, but definitely stay below this consequent encroachment. Not only is this consequent encroachment, but this is now another fair value gap that's been inverted, right? So if you think about like traditional support and resistance ideas, this is kind of like resistance, right? But this would be like the strongest form of resistance you can find. So ideally, I want to see the market really come out strong, do something like this, and then really continue to drop. Next target, there's a couple target levels that I'm looking at. I do think ultimately we'll get down here to this 1.231 level. This is going to be the first level that I'm really looking at for us to really get to. So that's kind of the idea here. Especially since we took out this low here. I will be looking at this order block here, but I think since we already ran into it once, that we're probably going to keep going through once we get another opportunity. So especially with this momentum that we're having, I want to see just, a very strong retracement. We could even see coming out next week that we could gap low, like we could gap like this, like the candle could form and kind of have a gap like that. I wouldn't be like surprised at that at all. But ideally, I want to see the market really run off of these highs and then continue to go lower. Target will be here at this 1.246 level. I think this is going to be pretty much like a crash on pound futures. And so if you guys aren't familiar with pound futures, again, the symbol is 6B1, but it's basically the same thing as GBP USD, right? Just the futures platform. So if you trade futures, it's easier. So ideally, that's what I want to see happen on pound. And yeah, so we'll see what happens coming out first couple of weeks. When we wrap this up, I will go check back and see what the Forex Factory looks like, and then see if there's anything that kind of lines up with that. But ideally, worst case scenario, I could even see us coming back up into this fair value gap, but I don't even think we'll get that high just based on the weekly stuff. But I'd love to see Sunday, Monday, Tuesday coming up, forming a high here, and then the next couple of days really just kind of trading back into that trend that we want to see. And this is where I'm going to have some fun for sure. So let me go to the comment section. Jordan, what's up, Jordan? How's it going? I'm going to call you Z because I don't know how to pronounce that, your username. So ZY yo at 1. But yeah, as far as we look at things in the daily, there are some little, like we traded back into this volume imbalance or this fair value gap there. But yeah, I'm really looking at these lows for us to get through this week. I think this is going to be just a crash on pound. As far as we go down to the really smaller time frames, I could see us definitely running back up to potentially what lines up with that here. Would not be so when you guys next week, how this might look on a smaller time frame, just kind of give you guys a little bit more sauce. If we get a high run, I want to see some level of liquidity ran on a smaller time frame. And there's a few levels, these old highs, these highs here. So don't be scared if you come in the next week and you potentially see the market just do something crazy like this where it runs up above these old highs like that. And gets everybody thinking that the market's going to go higher. Because it lines up with a higher time frame idea that it's going to come up, potentially run, stay below this consequent encroachment, and then go lower. So let's go to pound futures. I know I'm spending a lot more time on this than I usually do, but and if you guys are enjoying this, please show the comment section some love. Like, just throw in here and just be like, hey, I'm loving this. This is good analysis. I know there's like 40 people on here, so 40 people are watching. I know at least 10 people can comment in the box and just say that they're feeling this breakdown. They see the value. You know what I mean? Because I'm not getting paid for this. I'm doing this out of my own good grace. Just, you know what I mean? So obviously I get paid trading, but like I'm not doing this. I'm not doing this for no one's paying me to do this. So hopefully if everybody's enjoying it, throw a message in the chat just saying you're loving it. So let's go to Euro. I think did I do Euro already? Oh, we already did Euro. Let's go to why you guys are actually here. Let's go to the Nasdaq. Although lately me and Nasdaq have not been getting along. So let's see what's going on. So we ran this old high here. And this was kind of the target. I'm pretty sure this is probably spurred on by earnings week stuff, but we ran this old high. Right? This was the all-time high. We were pushed into this by a strong, momentum after the elections, right? And so price took out this old high here, wicked above this. And so I'm really mad at my futures platform. So you guys know that I'm a futures trader, but I'm still pretty new to the futures platform, admittedly. Like most of my experience, most of my years of trading has been on Forex and Forex platforms. And so I thought I could hold my trades overnight on Nasdaq. And apparently the contract size that I had, I trade with AMP futures if you guys don't know, but I tried to hold my trades overnight, going Thursday, going into Friday, because I just saw the market really running back at least to this low right here, and closing the day out, it's like a 200-point drop. So I had I don't know, like 3 or 4 contracts on Nasdaq on Friday, and I was trying to hold them overnight, and it closed out on me, basically saying that you can only hold so much overnight. And so I'm used to Forex where you can just kind of hold things as long as there's money in your account, right? And you're meeting the margin requirements, like you can hold as much as, your account will let you hold. There's not a restriction for overnight stuff. And so I don't know if someone has more info on that, but I tried to do it on AMP futures, and they cut my trades. They basically cut them out when the day switched over. And I didn't realize it until like a few hours later. And I came back to the terminal and I was like, why are all my trades not active? So I missed this entire run that happened on Friday, and I was sick about it because it would have been a record day for me, for sure. Probably like a record day this year, but whatever. So anyway, we saw the market really come back to here. So the question we have to ask ourselves from a daily perspective is, did we sweep liquidity just to continue to go down? I would say highly, if we break structure here, then we could see a more extended, prominent run. Now, in the grand scheme of things, I mean, we've been in a bull, like pretty much a bull market this entire year. Like this is election years are usually good for having really good bull runs, because usually the party that's in charge wants to make it look like things aren't as bad as they might be, or the economy is good, and usually people care about the economy during the election years. So right, so like the S&P has pretty much almost had a 50% increase this year, right? Or, I'm sorry, the Nasdaq has had a 50% increase this year. We started this year around 24,000, right? So we've been making record highs all year, pretty much. And so the question we have to ask ourselves is, are we retracing to come back into the range, right? And if we think about power three, again, consolidation, manipulation, distribution, and then we have a return back into the range. This happens in the yearly cycle as well, right? So we'll usually get some type of high form for the year towards the later end of the year. And, we'll spend the rest of the year kind of trading back into a range. That's why I tell people not to trade during December, or have, expectations about what you're looking at during December, because, the market could, be less volatile, right? And so ideally, so we saw the consolidation, manipulation. So the question we have to ask ourselves is, are we going to be in a bearish market for the rest of the year? My gut is saying no, just because of geopolitically what everything is going on. But ideally, what we want to see here is we want to see the market really gives us some signs of bullishness here. And basically to rally. And so ideally, from a daily perspective, I want to look at this fair value gap here. There's two levels that I'll be looking at. This low here. And then I'm looking at this level as kind of like my safety level, or kind of like my fail-safe level. That's the word I was looking for. And what I mean by this is that if the market stays above this low, then we're probably going to continue for bullishness. There hasn't really been any broken structure on this day time frame. But yeah, we did sweep liquidity. Yeah, we did get a 4-hour break, right? But we really haven't broken structure on this daily time frame. So for all we know, this could be really just a retracement back into the range. If we measure this order block here, it's about the 50% level that this fair value gap lines up with. So we could see something like this where the market could potentially go higher. I can't really bet against long-term bearishness right now. So I want to see something like this for now until we take out this level. If we take out this level, all bets are off. We're going to go lower. But as of right now, I still have to kind of look for opportunities of bullishness and opportunities to get in on bull trades. So ideally, I'm going to want to see these fair value gaps. When the market runs back up into these levels over the next couple of days, I'm going to want to see these things inverted. So I need to have some type of opportunity, or some type of basically sign that the market's going to give me that it's ready to go back up, right? And so usually breaking structures and inverted fair value gap are good signs that the market's going to potentially go higher, right? And so I'm going to make a note that says want to see inverted. And if we don't get this inversion, then we're probably going to continue bearishness. But I just don't want to buy into that right now, because the higher time frame picture is not bearish. So ideally, I want to see this invert, meaning that I want to see these disrespected. Right. So ideally, I want to see the market continue to go higher on these. And yeah. So something like this, where it breaks through one or both of these, right? Maybe potentially retest and then goes higher, right? So that's ideally what I want to see from this. But if we don't get that, then probably will just stay out of Nasdaq. I'm not too in love with Nasdaq right now, just because whenever we trade at all-time highs, we usually I just like to have room. It's a mental thing, and I think, very, very, like, for me personally, like, it's just one of those things where, like, I'm so used to trading forex, that, like, very rarely are you making all-time highs or all-time lows. You're trading in a range. You have targets you can aim for, and this not so much. So ideally, I'll be looking to see how this kind of works over the next few weeks. But I'm glad to see that we got out of this kind of post-election chop that happened over the past couple of weeks. So yeah. So that's all I have for Nasdaq. Let's go to E. Let's go to ES. So ES again is going to be the S&P 500 or US 500, whatever you guys trade. I think this one, just at first glance, kind of gives me more confident. Well, let me look at the weekly. Yeah, this gives me a more confident kind of idea that the market's going to continue to go higher. And so if this is your first time trading Nasdaq, I actually recommend ES. I think it moves like, if you guys trade forex, I think GBP, JPY is like the king as far as like how many pips a forex pair moves in a week. Nasdaq is like GBP, JPY. It moves, but sometimes that can be scary. So if you guys are new to indices, I would stay away from Dow US30. I know people love US30, but like stay away from Dow Jones US30 and look at ES. I think this moves very comfortably. So what happened last week? So over the past couple days, 1, 2, 3, this is Monday, we pretty much have been on a bearish trend. I don't think we're going to, there's nothing here. There's nothing like geopolitically, especially with the election, that really gives me the idea that we're gonna you know, continue to run lower. So I would be surprised if that happens. But ideally, I'd like to see the market really run higher on this. And I do like the fact that we came out and we respected consequent encroachment of this gap, right? So that's a good sign. So we traded past this old high. If you look at the weekly, just one more time at the weekly. Things I don't like is that we came back down to this old level. So we took out this buy side level. The next candle, we came back down. But we have these order blocks here. So I think this is a really good sign that the market continue to run higher. Respect the consequent encroachment. I'm going to hop down to the 4-hour time frame. This is going to be the same thing here, right? So we have this old order block here. The market really came up and tried to retest. I think coming into next week, what I really want to see, very similar situation here, is I want to see this order block. I want to see this this fair value gap disrespected. I just need some type of, so if you want to think about thought process, I guess, like, because this is what helps me as a trader, right? Is being able to kind of have not just the how to draw a line of support and resistance, how to recognize a gap, right? That type of stuff, structure, but like how to think through a scenario, right? So ideally, if I want to be bullish on this, I need to see some type of bearish liquidity marker disrespected, right? So that's the only way that I can see whether it's a break in market structure, whether it's a fair value gap that's disrespected. In this case, this would be a fair value gap, right? And this would be a bearish SIBI, but ideally, in a normal scenario, this would represent bearishness, and it very well could. Like, we still could do something like this, where we trade up and continue to run lower, right? And we could run to this gap, we could run to whatever. But ideally, at some point in the game, if we're going to be bullish, I need to see these old civvies disrespected, right? And I don't think we're done going higher. So basically, what I'll be looking at, I don't have a, and I guess it's kind of with Nasdaq too, I don't have a full bias with this. Ideally, I would like to see bullishness. But in order for us to see bullishness, two things need to happen. We need to disrespect this civvy here, right? And so I'm going to make a note that says, want to see civvy disrespected. I guess inverted is the easier way to say it. Want to see this inverted if we're going to be bullish. And then also looking left here, this order block also kind of lines up with that as well. So ideally, you know, I want to see this market. If I want to see this market run higher, I want to see this thing inverted. Also, maybe that secondary gap right there, right? So, and definitely want this to stay above consequent encroachment of this order block here. So again, the highs, the lows, the 50% ranges are all levels that the algorithm is going to look at in terms of like what price is doing. So I think if we get above this gap, and definitely above that one right there, that secondary one that's right above it. If you guys can't see it, I'll draw it out. Ideally, if that's the case, then I want to see, you know, I think we're going to be back on bullishness. So really I would not be looking to take any trades bullish until we break above this, and bearish just because we're still in an overall uptrend on the daily. I don't really want to take any positions either. So I'm really just looking for bullishness until we get a break of structure down here. So if we get all this violated, then for sure, you know, because this could be a breaker. We could run up, run down, and then take that out. But I don't really have anything until we break above this gap. So I think a lot of trading is just being patient and seeing what you want to see play out, and then being able to kind of carry on once you get what you need to see. So oof. Okay, my bad. I just saw the comments. Let me share my screen. I think I'm looking at the wrong window. So ideally, if you guys should be able to see my screen now, my bad. Let me close that out. I always do that. I always have like 2 trading view windows open, and then uh, um, I end up sharing the wrong one. So ideally, again, this is what I'm saying here. If we look at this this 5,900 level, or actually, if we go back to the weekly, time frame, again, what I'm saying here is we don't really have a reason to be bearish at this point. So trying to sell this trend would be dumb, right? We're very much making new highs. We traded back into an old order block here, and there's a lot of reasons as to why this market should still continue to go higher. And then if you think geopolitically, again, election time, you know, bull market run because of that. So ideally, you know, we want to see this market continue to go higher, right? We want to see this market go up. But we need to see, in order for us to really have a vote of confidence for this S&P market to go up, we need to see something inverted. We need to have a break in market structure. We need to see some type of, you know, bearish liquidity marker run lower, right? So in theory, you know, again, there's 2 levels that I'm looking at. I'm looking at this order block to the left. I'm looking at this civvy here, right? And so if we are going to be bullish, which I think the higher time frame dictates we're going to probably go back up here. We could run lower. We definitely could run lower, but like I think based on higher time frames, the daily, this 4 hours probably going to want to go back up. We also respect the consequent encroachment of that fair value gap as well, perfectly. So this gap is what I'm eyeing. This gap right here is going to be kind of like very important to see what we're going to do going forward. If I'm right, we're going to invert this, right? And we're going to run higher, just lined up with the higher time frame stuff. We could, I mean, at some point we could open up the week, run lower, right, and then go higher, or we could come straight out of the week and just invert, right? It really depends. It doesn't really matter how it happens, but at some point, this is the level that I'm looking at to see how, if we can break through here, how we can continue to run for, you know, eventual buy side up here. Now, because we know that the market is going to continue to make new highs. Probably there's a strong chance that it's going to happen. And again, the higher time frame daily stuff tells us that, you know, this market really hasn't shifted structure yet. It's doing what it's supposed to do, right? It created a new high, then it came back into the range here, right? So we want to see this go higher on the daily, and we know the higher time frames are the parent to the lower time frames, which are kind of like the children, right? So whatever happens on the bigger time frames is going to inevitably play out on the smaller time frames as well. So so all that to say, I'm looking at this level here, this 5,900 level. I want to see this potentially inverted. If we get here, if we retest this level and the market keeps, maybe it's wicking off of this and it's not really giving strong confidence, then that could be a selling opportunity. to continue to go down. But how I'm going to be looking to play this is that I'm not really going to try to take any trades. If I was trading ES, I wouldn't try to take any positions long until we've cleared this one, because of this order block here. So this red line represents the CE of this. Let me draw this. Go right. Actually, let me go center. So ideally, I don't want to see anything happen until we take this out and go higher. So yeah, so that red line represents CE as well. So ideally, I'm bullish. So again, I want to see something like this. Wow. Something like that where we, continue to run up, potentially respect this gap, keep going. He says, as a OSOK, I have no idea what OSOK is. So maybe if you want to put us in, school us in the chat, I have no idea what that is. But yeah, I have no idea what that is. So I'm not trying to rain on your parade, but no idea what that is. But ideally, I think these are favorable market conditions. I don't think there's anything wrong with this. But I just think that we just got to be careful anytime you're trading near all-time highs. So I think that's it for YS. And then on the daily, another level that I potentially might be looking at where the market could dip down is this volume imbalance there. So let me get rid of this because it's no longer relevant. And then go higher. Yeah, so I'm looking at that for the 3. Same thing for YM. I wanted to see, we took out this target. We had this huge daily fair value gap. So this is basically playing out to what we want to see happen. This is basically playing out to see what we want to see happen on the daily time frame and the weekly. It's just, a little bit slower than potentially the other ones. So we have this higher high that was formed. We took out the liquidity here. We have this new fair value gap right there. So ideally, this is lining up exactly with what I would want to see. So if you're trading US30, this is ideally what should potentially happen this week, or could potentially happen this week. I shouldn't say should, but ideally coming back into this gap at 43,445, and then sweeping the low of last week and then going higher. So that's all I have for you guys. I'll stay in the chat for a second. And if you guys have any questions, feel free to, let me know. Jump in the, if you guys follow me on any social media right now, like I said, I'm doing a free course, right? I'm doing a course on YouTube that basically, is open to the public. I really wanted to get back to the trading community. If you guys follow me at Breaks Trades, you guys can see that course. It's under 2024 mentorship playlist, right? But this is kind of just my way of giving back, right? Like, I think this stuff changed my life, man. Like, to be honest, like being able to go into the market, and it doesn't, even if it's not your full-time thing, right? But being able to read these charts and sit there and be able to grow an account. Like, I was able to turn a $10,000 account into $41,000 over the past 3 months, right? And so like being able to grow an account and like do stuff like that independent of a job, I don't have to have a boss that tells me what to do. I can, and I do work full time. I just want to make that disclaimer. Like, I'm not somebody that lives full time off my trading, but being able to do those other things, it's just changed my life, man, because I can go and have a set of, income outside of this, my job. I don't have to worry about anybody. I can give myself a raise, right? Like, the last 3 months, I basically gave myself a $30,000 raise. And I think that it's this stuff can really change your life, even if you don't want to do it full time. So this is my way of giving back to the community. Please subscribe to the YouTube channel if you're not already. There's a link right there. It should be popping up. Um, and so, yeah, if you guys have any questions, I'll stay on for a few minutes, but hopefully you guys enjoyed this analysis. If you want me to review anything, let me know. If you want me to look at other charts, I got a couple minutes, so I'll do that. But yeah. So Alice says, how long does it take you to be profitable? I think this is the wrong question to ask. People are, it took me until I don't want to put a time limit on it, but it took me until three things happened, right? The first one is being able to understand what's going on in the charts, right? The second one is being able to execute on those things in real time. The third thing was being able to manage my risk to the point where I didn't blow it off if I want something. And so that is going to be that's going to be totally up to you. There's plenty of people in this world that can trade, right? Like they can sit at a screen, they can tell you exactly like all the stuff that I'm doing, they can tell that, but they can't push the button, they can't manage an account, they can't grow an account. So what you're asking me is how long did it take me to make money and stop losing trades? I mean, I was winning trades from day one, but did I lose stuff because I didn't, because I got overzealous or I got I got like way too cocky. I mean, and that's still like I still have to fight that stuff to this day. Like I still I'm on a win streak right now. So the number one thing I need to do is manage my head. So I don't think that I just can do whatever I want and make money. Right. So like you're always going to be fighting those things. But I guess to answer your question, for me, it took me realizing those things before I became profitable. And so however quickly you can learn your skill set, learn your strategy, right? So you know what you're seeing on the charts, be able to manage your risk, right, properly. And people always say the same things over and over again. I hate this. They're like, oh, manage your risk. But like being able to manage your head, it's not even your risk, it's your head about like how do you respond well to a loss, right? There's some people, they lose and they go in this slope of revenge trading until they blow their account because they lost $1,000. That $1,000 loss turned into $10,000 because they kept trying to get that $1,000 back, right? So how do you handle losses? How do you handle the market, winning a winning trade, right? Do you try to double, triple down because you see the green number, you want to maximize that, so you just keep hitting buy on a bullish move, or sell on a bearish run because you just want to get as much money as possible, right? So like those things, right? And so really the trading is more about managing yourself than it is seeing stuff. You can learn this. This stuff is not hard. I'm going to be honest with you. It's not hard, right? It's very logic based stuff that I'm teaching, right? Like, because it's an algorithm. This is a computer program that drives this market. So it's not something that takes a large degree of intelligence. You just have to know what certain stuff does and how to think in certain scenarios. So it's like a video game or like a board game, right? And you can be taught that. But the thing I can't teach you, the thing that nobody can teach you, is how do you handle being down? How do you handle a loss? How do you handle being down in your account? How do you handle getting punched in the mouth? Because it's going to happen. You're going to lose trades you think you should win. You're going to win trades you think you might have thought you would lose, right? But how do you handle those moments when things don't go when you expect? And I can't teach you that. So long story short, it's going to take you managing those things. And it's going to be, that answer is going to be different for everybody. For me, it took, I don't know, like 3 years before somebody like really, 3-ish, 4 years before someone really pulled me aside and said, this is what you're doing wrong. But once that clicked, then it was easy. But one shot, one kill. Basically, I'm looking at the higher or low of the week to be formed. I can trade the weekly ranges. Okay, so that's the same thing. Yeah. So I know what you're talking about now. So I didn't know what you were saying with that, but like that's essentially what I do when I trade. Is I'm looking for this low or higher form to be low or high of the week to be formed, and then I'm really just trying to take bits and pieces. Like if if it's going to be a bullish trend for the week, then I'm really just trying to take bits and pieces between that low and that high and that projected target, right? And so I think the misconception here is what I do is because someone asked me about this, like, oh, you're trading the whole range, or you're holding. I don't swing trade, right? So if Dow Jones is going to go higher, right? For instance, right? Let's say like the market's going to go lower. Like, let's pretend this is a bearish candle. Like, it goes down and then it goes all the way up, right? I'm only like between this low and this high. All I'm trying to do is get bits and pieces of, good setups. And for me, my magic number is like 1 to 2, right? So I'm looking for 1 to 2 good trades in a week, between this low and this high for that given direction. So we're basically talking about the same thing. Next question. So since you got a 9 to 5 job, do you consider yourself a swing trader or a day trader? So I'm a day trader. I don't swing at all. I don't swing trade at all because my personality type is not set up for swing trading. I'm the type of person that, like, I need to be able to look at my screen. I'm constantly looking at my screen, like my phone, if I'm in a position. Friday, I was in a trade, and I do this gym class early in the mornings at like 6 a.m. and I kept breaking the class to go check my phone, right? So I'm not the type of person that I can like sit in a position or sit in a trade and basically not check my phone. So I have to kind of do that stuff to, like, just mind my mental. So I definitely am in and out. Now, thankfully, I have a job that allows me to kind of like do stuff like trade and be on the computer while I'm doing stuff. So I can look at these setups. I can organize my day to the point where I can come in the market, do what I got to do, and then get out. So I'm not, I'm lucky in that sense. I know a lot of people can't do that, but if you are somebody that has a job, then, there's ways to get around that, right? The swing trading might be more of your option, more of your thing. So you might have to do something like that. So yeah, so I'll stay on for like 1 or 2 more questions and then I gotta bounce. Also, going back to this example on ES, I do want to clarify that um, from a 4 hour point of view, yeah, this market should continue to go lower. Like, based entirely what we're seeing on just this time frame, the market should continue to go lower. All I'm saying is that this is what I want to see happen, and this is what I want to engage with the market. I don't want to continue to look for bearish opportunities when the bigger daily time frame is bullish. So until the higher time frame gives me like a confirmation that it's switching to a bearish, position, then I'm gonna stick with bullish activity. So that's the only reason here, because I looked at this and I think somebody can come here and say like, oh, I'm gonna buy as soon as this hits this gap. It's not what I'm saying. I want to wait for inversion. I want to wait for more signs that this market is shifting. Right. The first one was disrespecting a consequent encroachment, but ideally these levels being violated will signal to me that this market wants to continue to go up. So that's a patience game, and we very well could see this continue to drop next week when it hits this gap like this. But until we get this inversion, then I can't really be looking to buy. So that's all I'm saying. So yeah, so that's all I got for you guys. I'll close it out, and if you guys have any questions at all, let me know. But hopefully everybody enjoyed this. hopefully you guys got a lot out of this. And again, follow me on social media. Again, Brinks Trades. You know, if you are interested in being a part of that course, if you're interested in private mentorship, also just let me know. I do a lot I have a group of students that I do private mentorships with. It's more in depth. It's going to cover more of the indices, which is, I think, kind of like the money maker. Like, everybody wants to trade indices right now. So that's kind of the thing that I've been looking at. So ideally, yeah, if you're interested in that, kind of working one-on-one with me, or in a more like confined setting, it's not in the class, then, let me know. So, all right, that's all I got for you guys. Peace. Have a good weekend. Enjoy. Go touch Earth. Peace.
Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.